Hello and a very warm welcome from the Business Today television studios here in New Delhi at the India Today multiplex. It's budget day today. Finance Minister Nirmala Sitharaman's fourth budget, the final full budget of the second term of the Modi government, and a lot of expectations. What path will the government take when it comes to the coming financial year? Will it be a fine balancing act, or will we see political populism taking over the instincts of policymakers in North Bloc as well and the Prime Minister's office? And to discuss the budget and what we can expect in just 2.5 hours from now, joined by a stellar panel of guests, I take great pleasure in introducing Udayan Mukherjee, the global business editor of the India Today group, one of the best known market faces in the country, here with us live from the Business Today television studios. Also with me, Saurav Majumdar, the editor of Business Today, India's oldest and finest business magazine, and the BT Multiverse as we call it. And through this broadcast over the next hour and a half, we will be joined by many guests, including senior market voices. We also have our correspondents deployed on the ground, Karishma Asudani, who covers the finance ministry for BTTV, and Chetan Bhutani, who covers the entire infrastructure pack, and we'll also go across to them during our coverage. But I want to begin with Udayan, and the question really, Udayan, that I have for you is, the budgets in terms of their relevance are significant because it's essentially the prioritization that the government does when it comes to its spending. But from a market point of view, it's sometimes said that it's a non-event. How would you categorize it, Udayan?
It's become like that over the years, Siddharth. I mean, 10 years ago when we used to cover the budget, it used to be a much more important event for the market. But over the years, I think the importance has been significantly diluted. But this time around, because the economy is heading into a slowdown, and there is once again the murmur of this capital gains tax issue, but I think it assumes some importance, and not least because in the last 1 week, market sentiment has taken a big jolt because of the Adani issue. At such a time, if there is a capital gains tax issue which comes to the forefront, then I think this will be a difficult one for the market to handle. So I think what we don't need today, you can argue the pros and cons of a capital gains tax regime change for equities, but if it comes now, given what has happened over the last 5 or 7 trading sessions, I think it will be a difficult one for the market to handle, and therefore I would say this budget is not such an insignificant event. The other thing is, of course, the fact that we are heading into a slowdown in the midst of a global slowdown, and at such a time, given that private capex has not picked up already, if the government takes its foot off the capex pedal and says now we'll divert the market monies to revenue expenditure in terms of consumption stoking, then I think that will also be something that the market won't like, because we want to push ahead with investment expenditure. So I would keep an eye on those two things, capital expenditure boost like the last budget, and what is happening with capital gains. And if these two are okay, then I think the market will be able to take this budget on its stride.
That's a great point, really, Udayan, and you kind of brought into focus what happened in the last 4-5 days. People weren't expecting this. Sort of, the 2 points that Udayan added, but the bigger macro picture, a globe where there is a lot of uncertainty. We keep hearing the word recession, but we also hear at the same time, well, it may not be that big a recession, but there will definitely be a slowdown. Whichever number you look at it in terms of the GDP growth, the economic survey gave us a baseline of 6.5, but a pretty wide range from 6 to 6.8. The IMF has clearly said 23 and 24, India will be the fastest growing economy worldwide. In that macro backdrop, how would you say this year's fiscal and administrative policy really should pan out through the budget, Saurav?
Well, Siddharth, you've summed it up very well. I think it's pretty much a mix of all these things, right? You have a situation where the global, let's call it headwinds. We don't exactly know how deep it will be, but there will be global headwinds for sure. That has been acknowledged even in the economic survey yesterday. In this background, I think the finance minister will, and I heard you all talking about a balancing act earlier in the morning. I think that balancing act, every budget in that sense, is a balancing act. But this one is particularly significant because on one hand you have serious global headwinds coming in, and then you have to continue to push growth. If India indeed is to continue being the fastest growing global economy, you need to really push the capex expenditure like Udayan mentioned, and I think that holds the key. And alongside, you don't want to lose sight of the fisc. Because that's going to be very, very important given the inflationary headwinds which we are looking at. So it's very, very clear. These are the two areas I would look out for very carefully.
And I would say on inflation, the economic survey provided us a glimpse in terms of the government's thinking. They're just going by what the RBI has to say. At this stage, let me introduce two of our guests who have joined in. Geoff Dennis, emerging markets commentator, who is with us, and Rajat Sharma, founder and CEO of Sana Securities. Geoff, coming to you, very good morning from India. We can see visuals on our screens of the finance minister entering North Block for what is her fourth outing as far as the budget speech is concerned. But Udayan sort of set the context for the markets really in terms of this budget. What's your own take, Geoff?
Well, I think given that I'm an emerging market person, not just purely an Indian commentator, I think good to look at it from an emerging market point of view overall and an international point of view. And I think what the international investors want to see is certainly some target for the budget deficit that moves it again down further towards the probably slightly below the 6% of GDP number, in other words, moving it back towards the sort of budget deficits we used to have pre the pandemic. And I think that's a sort of a minimum condition, I think, to get international investors interested in the Indian market once again. And that will all be against the background, as your previous commentators have said, of very solid growth in India, certainly the best amongst the emerging markets, although China will recover this year, and also an inflation rate that is really reasonably under control compared to a lot of other countries. So I think the poor start Indian stocks have had to this year have had a lot to do with high valuations and a very good run last year. And of course, we've had the Adani Group situation more recently. But I think if the budget is sufficiently conservative, perhaps nonetheless with these capex initiatives would be helpful. But if it's sufficiently conservative to get that budget deficit target down below the 6% level, I think there's a decent chance that the foreigners will start to take another look at the market again. I personally don't think the international background is perhaps as difficult as some of your other commentators have said, because the Fed is nearly done, the dollar's weaker. All of that, I think, gives us quite a good year for emerging markets this year. For India to take part in that, we need to see the budget deficit moving lower once again.
Geoff, you alluded to the Adani episode. As an international observer and investor, let me ask you if that has tarnished India's reputation as an investment destination in any way, because it's led to a lot of turmoil in the Indian market, and I'm sure international investors have taken note of it because they own the Adani Group stocks as well. How big a factor could it be in India's standing versus other emerging markets in the coming year?
I think it's been a blow for India's standing, but frankly, I think it'll probably pass, not least because of the successful equity offering they've just done, of course, but also, to a certain extent, it's the Hindenburg Group against the Adani Group, and maybe some of the things the Hindenburg Research Group said were not necessarily correct. So I think there's a limit to how far this should be taken as a negative piece of news, because also this happened against a background where the Indian market is very expensive, of course. It has been very expensive, so it would be very vulnerable to this sort of attack by a hedge fund, by a research operation. So I don't think the damage will be all that lasting, frankly. And I think, at least I hope so, and I think it's probably correct to say fairly soon, albeit if the Adani Group is at lower prices, you'll start to see foreigners focusing on the usual stuff, frankly. And I think gradually, given the very strong start to the year China's had, and India's been lagging quite badly, I think eventually that'll start to bring people back into the Indian market. I'm quite constructive about India this year, even though it's expensive. So I think this particular micro situation, the Adani Group situation, unless it gets severely worse from here, I think will eventually fade from foreign investors' attention.
That's a good point there, and the term that you used, a micro situation. Let me head across to Rajat Sharma. Rajat, you heard Udayan, you heard Geoff. I just want you to come in from a market perspective in terms of expectations and possible fears as well.
Yeah, good morning, Siddharth. Quite frankly, Siddharth, while I'm a financial advisor who can only advise on listed companies, I don't necessarily look at the budget as a day to, sit in front of a terminal and trade. I look at it as a roadmap for things to come. And I think Udayan summed it up really well when he said the two key focus areas will be capex and if the government tinkers at all with the capital gains tax. Which personally, I mean, I have every right to go wrong. I don't think they will. We have our GST collections at 1.5 to 1.6 lakh crores. So, why spoil the mood by doing something to capital gains tax? I don't think anything's going to happen to that. In fact, the focus should be or will be to increase more consumption, tax people more, increase your GST collections, but don't do anything to capital gains tax. That's personally what I think will happen. The other two things that I'm looking out for from a markets and stocks perspective is there's two spaces which I think will be in focus, and that's where we have a lot of our investments. First is oil and gas, and the other one is FMCG. And I'll tell you why I talk about both, because in the oil and gas space, the government has introduced a windfall tax in July last year. Whether it's in budget or sometime thereafter, they have to, do away with that windfall tax because, at that time crude prices were about $115. Now they've fallen down to about $80. Most of our oil and gas investments are in upstream companies, so the likes of ONGC and MRPL. That's where we've made a lot of investments. I think these stocks will benefit whenever this happens. I expect it to happen now or sometime immediately after the budget. And in the FMCG space, I think the government's focus has been to control inflation, and if they can, then raw material prices for a lot of these FMCG companies will go down, and that's how their overall margins or bottom line will improve. So one of the stocks which I think will be in focus is ITC, because there's been a lot of talk on if there's going to be any more taxation on tobacco. I don't think it will be, but it'll be interesting to see what happens in the budget. So lots to watch out for. Alternative energy. I think the government, if they have to reduce their dependence on oil and reduce their import bill, they have to encourage alternate energy. So I think they've been talking a lot about using more and more ethanol to blend with petrol. And I think if they announce any more subsidy there, a lot of sugar companies could benefit, because sugar companies are saying today we get 20% of our revenue from ethanol. It will go up to 30 to 35%. So all these things are awaited. Let's see what announcements are made. I think it's a day to just sit back and listen to the roadmap which the FM presents.
Siddharth, the other issue that we need to keep an eye on is the kind of disinvestment roadmap that the finance minister talks about, because this is one area where they're consistently falling short. I mean, last year the target was 64,000 crores, 60,000 crores, and they're going to end up with 31,000 crores. And markets were reasonably stable last year. There's no reason, and out of that 30,000 crores, 20,000 crores was LIC. So without LIC or keeping LIC aside, there's been very little by way of disinvestment which has happened in the last year gone by. And this is a problem area. I don't know why the government is not able to do it. I mean, in the coming year, they've lined up IDBI, they've lined up Container Corporation, they've lined up the Hindustan Zinc sale, but I'm not sure they're able to push ahead with all of this given their very poor performance this year. And I want to ask Geoff this question. Geoff, there is a lot of expectation over the last couple of years which had built up with state asset sales. But the result has not been great. How do foreign investors see this issue of disinvestment targets consistently being failed on by the government?
Well, I think it's got two implications, both of which are unfortunately negative if the government misses disinvestment targets. First of all, of course, it's a blow to actually getting the headline budget deficit lower, which is sort of the mechanical side of the process. But also, perhaps more important for the long-term interest in Indian equities from foreigners, it sort of compromises the, by definition, the transfer of assets from the public sector, from the government to the private sector, which most investors, given that we're talking about, free markets presumably and private markets, which is going to handicap the growth of the economy over the long term, because the assumption's got to be here the private sector is more efficient than the government sector. So I think there's two elements to it, and they're all negative. If you miss your disinvestment target, you hurt your ability to hit your fiscal targets, which is negative. But arguably, at the margin, compared to expectations, you have a negative impact on the growth rate of the economy. So I think what you need to see is the government being able to propose a realistic disinvestment target that they have a good chance of hitting, as opposed to, in the famous phrase, over-promising and under-delivering.
That's a good point there, Geoff, and the number that we are expecting in terms of the budget estimate for the next fiscal from a disinvestment point of view is just a little bit over the current year's number, which is 35,000 crore. And Udayan, you made the point about disinvestment companies. I have here with me a list of almost 47 companies where there is potential to do it. But one point before we go back to Rajat, people in the government, in the finance ministry, before the budget making exercise got underway, told us that the analysts and media need to change their view with regard to disinvestment. And when I countered, why are you saying that, they said there is just only that much that we can do. There is a political economy perspective, and especially in an election year, stop expecting any more big sales. Air India, as that official put to me, said was a once in a lifetime kind of event, really. Saurav. Rajat, just very quickly, and then Saurav may also want to jump in. In terms of any changes that may be made, and this is, I want to repeat this point and get your views, in terms of any changes that may be announced with regard to capital gains taxation, the hint so far, according to me, is only a roadmap and not the actual sort of change. That means a hint and a roadmap. Would that be a better way to do it, the budget becoming a sort of public consultation about what to do with capital gains in the long term?
Yeah, so there's two things here. Firstly, I think there's very little that the government can do, especially going into an election in about 400 days from now. I don't think they're going to do anything much with capital gains. That's my personal view, but I think I can go wrong with that. There's two suggestions that are coming out. One would be to increase the duration for which you have to hold equities for them to be taxed at 10%. So instead of 1 year, you can make that 2 years. The other could be a slab system where you don't tax capital gains up to, say, 5 lakhs. Above 5 lakhs, you tax it at 5%. Above 10 lakhs, you tax it at 10%. There's a lot of suggestions that are coming, but frankly, my opinion or my view would be that the government won't do anything. It would be a non-issue. They won't even touch it because, as you can see, we're collecting 1.5 to 1.6 lakh crore of GST a month. The focus should be to increase consumption, try to increase, the GST collections instead of, as I said before, why spoil the mood of the market? Generate more volumes, get more people to invest. That would be a better thing to do than, tinkering with capital gains.
Well, Rajat, the sort of counter to your point would be, why do that? The counter would be, governments have to do certain things because there is something called political signaling. Saurav, I just want to come to you and tell our viewers about the capex growth story, and you could sort of jump in with your own sense about it. FY19, the number was just over 3 lakh crore. And the FY24 budget estimate that many analysts are working with is closer to 9 lakh crore. So just see the quantum growth in capex, and like everyone says, it's capex and the government which is really shouldering most of the burden of growth. Do you think the private sector will also kick in, because much of the bad debt crisis and all of that is now well behind us, Saurabh?
I think that's a very important point you mentioned, Siddharth. I think the time has now come, and I think that is the expectation. If you even look at the economic survey and the murmurs from the government, I think the expectation is that now that the government has done the heavy lifting in the critical years, last 2-3 years or so, and serious money, the implementation of course is another matter, but the amount, the allocations are there. There is this expectation now that the private sector will come in, and I think now that the bulk of the the problem areas have been addressed, I think there is a sense that green shoots of private sector capex is happening, and I think the government will be hoping that this year will be the year when private sector actually comes in, which was the whole idea, that it will crowd in private sector investment, and let's hope that FY24 is that year, and that's what the government will surely be hoping for.
Siddharth, there's taking off on what Saurav is saying, there are two issues out here. One is that the government capex thrust may well continue, but we are entering a year of a global slowdown and some demand slowdown in India as well, which is typically not the time when CEOs like to go very heavy tilt on a fresh capex. And that's what you're hearing from bankers as well, that this is not that kind of a full-fledged credit cycle that they saw between 2005, 6, 7, that era. We are not getting that kind of confidence from the CEOs. So need to keep that in mind. The other is this 9 lakh crore and the previous year 7.5 lakh crores that you were talking about. The government chooses to route a lot of this through state governments. And the state government implementation of this capex is nowhere as clinical or efficient.
The bullet train, Bombay, Gujarat, Maharashtra, great example, Udayan.
Correct. So, then you have a very big headline number, but actually what is filtering through into the system is probably not that much, and therefore you're not getting enough bang for the buck. So while I think there will be a strong announcement today, we need to see how much of it is routed through states like last time, and whether private capex is in a position to respond or take up this kind of signal which the central government is sending. On those two issues, we need to be a little bit more careful.
I know we will head across to Geoff briefly, but Geoff, before we do that, our colleague Karishma Asudani, who tracks the finance ministry, has been standing by. Karishma, coming to you, a very quick recap from you in terms of what you've been hearing all through the last couple of months in terms of budget priorities. Any numbers that you can quickly rattle off?
Well, right, Siddharth, as we are live from North Block, the focus remains on fiscal consolidation that the finance ministry is going to be looking at. In fact, the numbers that Economics Survey yesterday focused on, which is looking at a GDP growth of close to 6 to 6.8%, hints that the government is going to keep a fiscal deficit target below 6%. We are also expecting a jump of 12% in the total revenues, and of course, announcement of certain social schemes. Importance could be given on climate change, keeping in mind that the COP28 is this time going to be in close to Asia and Middle East, and of course the focus is also going to be on the green energy. These are what we are picking up. Besides this, what's on cards could be a likely tax incentive, but if that's going to be announced today or in the months to come is a question to ask. So three key things to look at is, one, a fiscal deficit target that government center is aiming to be below 6%, a GDP growth of 6 to 6.8%, and an increased capex. It's expected that it could go up to 9 lakh crore for this upcoming fiscal year. It has been close to 7.5 this year, and a successful one. Well, just few minutes away from now, and Siddharth, you will see that Finance Minister Nirmala Sitharaman will, with her, we say, the creme de la creme of Finance Ministry, the A-team of Madam Finance Minister, and the key secretaries will be here. If I just ask my cameraman to pan, she's almost walking out with her A-team. We have, in fact, the Secretary, Department of Economic Affairs, Mr. Ajay Seth. We also have the Revenue Secretary, Sanjay Malhotra. We have MOS Finance, Mr. Bhagwat Karad, and Pankaj Chaudhary, not to forget the man who's leading it, that is Finance Secretary Dr. T.V. Somanathan. We have DPAM Secretary, that is Mr. Tuhin Kanda Pandey. We have the Chief Economic Advisor. We have the CBDT Chairman, CBIC Chairman Nitin Gupta, and Mr. Vivek Jory. As you look, that's a visual to watch, the last full-fledged budget of the current Modi government's term. You also see in her hand is the digital copy, that is the tablet of budget. Interesting to see that how we have moved from the paper version of Bahi Khata to now having this digital tablet, also signifying, of course, Digital India and the efforts of government in technology. Over to you.
Interesting choice of color for the tablet, Siddharth. It's red. I hope that that is not a signal on capital gains to the market that it's coming.
Well, it's been red all the while that it's been used, really.
It's a very dark red as well. But Geoff, just come in on this currency issue as well, because you spoke about the fiscal deficit and the need to move back towards pruning it back to 4.5% in the medium term. But you know, there is also a current account deficit issue which India is facing, which is quite high. And the rupee has not been the best performing emerging market currency over the last 2 or 3 months. How do foreign investors look at the Indian currency in the light of these pressures, having seen what it could do in the taper tantrum days of 2013?
Well, first of all, I think you're right. There's a very good lead in, but I do think the dollar is going to weaken further over the course of 2023, calendar 2023. Maybe not by a great deal, but it's going to be more likely to be heading down than heading up. And I think India gets some benefit from that. But I think the key here is that while a number of other emerging markets really started to move their interest rates sooner than India did, Brazil is, of course, the best example. Giving them a very, very large real interest rate cushion, which India does not have. But nonetheless, the Indian interest rates are positive in real terms, just. And I think assuming that monetary policy stays relatively tight and inflation continues to drift lower, I think the rupee will probably hold up quite well. But I frankly wouldn't even now expect the rupee to be a major beneficiary of dollar weakness. I think while some of these other more extreme real interest rates exist around the world, such as in Brazil, it's more likely that those countries will be the bigger beneficiaries. But in this environment, I anticipate for 2023, which is higher equities, bonds doing perfectly well, the Fed being finished after probably 2 more rate hikes, the dollar going weaker. I think the currency in India will not be a big factor for foreign investors. I don't see it going. Weaker particularly. It may go a little stronger, but it's going to be more of a neutral factor. And I think what's going to help foreign investors get back into India is some sense of the improvement in the local macroeconomic situation. Plus, of course, let's not forget, there's a lot of talk internationally about the fact that India is going to grow more strongly than China in 2023 and is also going to have a bigger population at the end of the year than China has currently. And I think that's all very, very helpful. So there's plenty of reasons to buy India for 2023, but I'm not sure the currency is the obvious trigger.
The market's open, Siddharth? Because we must be getting pretty close to maybe 10 minutes away from
10 minutes away from that.
I think we should keep an eye on that as well, how markets are opening up today. The SGX was quite strong in the morning because we've had a good night overnight for global equities. So we should be opening up, given that the last few days have not been very special for the market. But I think maybe the start of the trade today could be quite positive, because still there are some expectations that, as we've been discussing, the capital gains issue may not be tweaked with. And since the Adani FPO went through yesterday, maybe a little calming of the nerves has happened too on that front. So maybe we get off to a good start this morning and then take it from there as the budget speed unfolds. But we should know in about 10 minutes time.
Absolutely. And one of the points, Rajat, that I want to take with you here, the key issue really has been the valuation of Indian stocks that have been in focus. The Adani pack has completely been the key sort of headline. But do you think from an investor perspective, there is a relook that is justified at some of the valuations, the PE multiples that we are seeing as far as Indian stocks are concerned?
Yeah, so keeping Adani Group stocks aside, which I think even after the kind of fall they've seen are trading, I mean they're extremely overvalued. So if it was not for this Hindenburg report, it would have been for whatever other reason these stocks had to fall. But yes, I think there's lots of companies which are now available at very good price earnings multiple. They're not as expensive as the overall markets look, particularly in pharma, FMCG, oil and gas. A few of the stocks that I've recommended recently, like Marks and Sparma, the stock is trading at a P multiple of 14, but the industry average is about 23. ITC itself, and a lot of these stocks, like I was talking about ONGC, ITC, they're very good dividend paying stocks, and the multiples at which they're available, even after the recent run up they've had, are very attractive multiples. But going back to the Adani issue, if I may. Yesterday, a journalist from some foreign press called me and he said, do you find the timing of the, because this has spoiled the sentiment for the market. And he said, do you find the timing of the Hindenburg report a little suspect? They just did it 2 days before. And I said, look, they're themselves saying it's suspect. They're themselves admitting that we're not the cleanest people. They're short sellers. They're just asking you, what will you do about this? And I think the FPO going through was good because Indian companies have also sent out a message that we can get things done, and that I think is really important. So even though Adani stocks look really overvalued right now, I don't think these companies are going anywhere because they're systematically important for the country. So coming back to valuations, I think besides Adani stocks, there's lots of companies in the Indian markets which are available cheap, again, from these three sectors: pharma, FMCG, and oil and gas. I would stay slightly away from banking because I think that's where I see a lot of overvaluation. So if markets have to fall, which I think they will going forward, I think that's where most pain will come from. Financial services, whether it's banking, NBFC, so that's a space to stay away from.
Well, about 5 minutes to go and we'll know what the market opens up today. And it's just about flirting with 60,000, the Sensex, so we should get off to a positive start this morning, and then we'll see where the markets go from there. Initial indications are that some of the bank stocks will also open up. I think that's a sigh of relief given the news flow on Adani Group, because banks had taken it on the chin, names like SBI and ICICI Bank over the last 1 week, on fears that some stickiness in the assets, particularly from that group, might actually come about. But now I think they're breathing a little bit easier this morning. So the Nifty is suggesting 150 points up, 17,800. That's a good start. And the Sensex has leapt 450 points this morning. It's not unusual to see a lot of gyrations before the budget speech. As the punters take positions, tactical positions, betting on what the budget may or may not do. So, and given that markets have come off quite significantly, given the Adani news over the last few days, even more reason for a little bit of a bounce back heading into the budget speech. So that's where we are. It would be good to see the bond yield also on the screen, because that's a very important thing to monitor, probably even more than the stock markets. The benchmark bond yield that was hovering around 7.4%, and if we that will certainly move around given the fiscal deficit target which is set for next year, which we are all hoping to be around 5.9, 5.8%. So what's your team penciling in terms of a fiscal deficit target for next year?
I think it's anywhere between 5.8, 5.9. I think, I just wanted to make a point coming back to the discussion on capex and states, which you mentioned very correctly. Till November, studies have shown that states are lagging way behind in terms of the amount of the money they've been able to spend compared to the target, while the center has been able to reach about 60%. States together are just about at 40%. So much for capex, in terms of the implementation lag between what is announced and what is actually on the ground. And if the government really expects that this will be the headline sort of push in terms of this year's budget as well, then we'd have to keep an eye on actual implementation. Saurabh,
Udayan, I just want to add one quick number before we head back to our guests. the government had to spend close to 3 lakh crore extra, Udayan, due to sort of unforeseen extra subsidies that it had to give. This was also almost 1.5 lakh crore on fertilizers, I'm taking those numbers, and fuel, and the free food scheme 1.4. So from a budget making fiscal number point of view, 2.9 lakh crore, close to it, is off the table. So that's one. The second bit that we've been picking up, and we'll of course get the revised estimates of all the major ministries, in several ministries, and it's tough to take sort of names right now because we are just hours away, the expenditure has been lesser than what it was budgeted for. So some of the fiscal adjustment could be this expenditure compression, if I may call it, plus the fact that tax revenues have been far better than has been expected. So from a broad fiscal arithmetic point of view, then I think this is one of the best sort of number environments that the finance ministry team has been working in, at least over the last 3 years, Udayan.
No. Of course, you're right about that. The only challenge, Siddharth, is as we look forward to the next year, you're not going to get 15.5% nominal
Absolutely.
GDP.
Even the nominal number has been kept lower by the economic survey.
Correct. So I think we'll be closer to 10% this year, 10.5%. On a 10.5% nominal GDP, there's no way you're going to get gross tax collection growth of 15-16% like this year. So that number will closely come down to tracking the nominal GDP as it always does. So while you will have, as you're saying, savings on fuel and fertilizer subsidies, etc., I think the challenge is what kind of a number do you assume in terms of tax collection growth for next year, on which the finance minister will be forced to be far more conservative. She was conservative last time, but look at the evidence of this year. You got 22% income tax growth, you got 20% GST growth. These are not numbers which are realistic for the current year. So all that you're benefiting in terms of fuel and fertilizer subsidies will actually be taken away by the shortage in or the relative fall in tax income or tax revenues for the current year. So I think it's still a bit of a challenge, particularly given that dividends will also be lower in the coming year and disinvestment will also be lower in the coming year, which is the point about divestment, the sad thing, that at a time like this, how good would it have been to get 1 lakh crores of disinvestment revenue? But we are never getting that, and therefore we are struggling to pare down our fiscal deficit.
And I'm going to go out on a limb here, Udayan, because we had some sort of insight into the thinking. Don't expect anything major as far as disinvestment. Maybe there will be a one-off, but no big sales really. And I had once asked this question of Bharat Sanchar and its relevance in the overall scheme of...
Also with the markets being what they are, I mean, you've already missed the bus, I guess, in the last year.
There's several companies. Geoff has been waiting by. Geoff, the question that I want to ask you, and you've kind of answered it, but in the simplest possible terms for our viewers, do you think post the Adani episode, foreign investors will be forced to relook the valuation of the Indian stock market?
No, I don't. I don't think they're going to change the way they look at the valuations or reappraise valuations, because I think they're probably going to treat this as something of a one-off. And as I said already, you know, there's some disputes between the Hindenburg Group and Adani as to who's telling who's right and who's wrong, and is there a bit of right and wrong on both sides. So I think what it will do is to perhaps underline to people the risks you have when you look at a market that is priced so highly, in other words, where PE ratios are so high. But assuming this is limited to this particular story, the Adani Group, I think we'll probably go back eventually, before too long, in fact, to the game that says India's expensive. There's a good reason for that. It's a very, very strong growth economy compared to other emerging markets. Now, I know there's often some issue seeing those GDP numbers dropping down to EPS growth, but I think there are reasons why people like the India story for the long term. And I think as long as this turns out to be, as I say, a one-off situation, I think eventually foreign investors will move back into the Indian market, especially in what I think is going to be a much more benign, or perhaps I should say less difficult global environment than we had in 2022.
Another thing, Siddharth, you were just talking about the fact that there will not be a disinvestment target of any material number this time around. There's another reason. Imagine now, the biggest thing is Container Corporation for next year. The government puts it up for sale, Adani bids for it and gets it. How will that look? Does the government have the gumption to sell a state asset to an Adani group at this point?
That's a brilliant point. The political economy overhang is very significant. At this stage, viewers, full house, Business Today, the entire team, the strength here, Udayan, Saurav and my colleague Aabha Bakaya also with us. We'll try and get her on screen. But Aabha, and there you have it. You wanted a question with Geoff before he leaves us in another 10 odd minutes.
Sure. Geoff, everyone's, I'm coming in halfway, so I'm not sure what's been covered, but everyone has been raving about how India is going to be this bright spot. Do you see any kind of gray on the horizon with this budget, with the fact that we're entering into, a time frame where a lot of attention is going to be on balancing politics with, of course, economic agenda as well? Do you see any risks to really what we might see in terms of how India is perceived if the government goes awry on what they deliver with the budget this time around?
Yeah, I mean, I think you do have to look at the budget in context, as everybody said so far, to be fair, of the fact that this presumably is the last full budget before the elections, and what are the prospects for the elections in calendar 2024. So I think, as people have put it much more eloquently than I have done so far in this interview, political economy is going to be as important as pure macroeconomics. But I stand by what I've said, which is that if the macroeconomic environment in India is perceived to be to an extent improving because you get the budget deficit down a bit more, heading down towards the sort of numbers that we had pre-pandemic, if we see inflation beginning to drift off again so that there'll be no more rate hikes and maybe some rate cuts before too long, in a weaker dollar environment, I think that's going to give the market something of a tailwind as it heads towards the election, when, of course, political economy will take over. So, in other words, what I'm trying to say is this crucial budget is being set against a background, I think, in terms of the global economy, global markets, which is a little bit more favorable in the next 12 months. And that ought to set the scene for a reasonably smooth run down to the election. But then, of course, before long, the election will take over in terms of opinion polls and what's going to happen in the election itself. So there's a political economy element to it, but this is not going to be such a bad global environment in 2023 that, the market can't deal with that. I think the market can deal with it, albeit I'm not saying India will outperform. I just think India's had a very poor start to the year compared to EM's up about nearly 8% year to date. India's down about 3.5% in dollars. A very poor start. I expect India to catch up. I don't think it will necessarily outperform, but I think we're all getting a bit too gloomy about the market given what happened in January. The budget should set the scene for a better market. And I think the global environment is going to be more favorable than it certainly was in 2022, which will allow us to head down towards the election, presumably in reasonably good shape.
All right, Geoff, many thanks for taking the time out to be with us prior to the budget, and we hope to come back to you after the budget and do a deeper dive on the actual numbers. At this stage, let me welcome in Sunil Singhania, founder of Abacus Asset Management. Morning, Sunil. Full house, BT house here, Udayan's here, Rajat is also with us, and I'm going to request Udayan to begin with Sunil our conversation.
Hi Sunil, morning. We've been talking about this capital gains issue, and every time it almost seems like a bit of a kite flying before the events. The government sort of plants this germ of an idea that it might come this time and it never comes, and that's a sigh of relief for the market. Do you think this time will be similar, or is there some merit to all the talk going on that this time there will be some normalization in capital gains for equities?
I think you're right, Udayan. Every time it comes like, overhang before the budget. One has to look at the merits of giving incentives for, equity investing. I think ever since relief was given in terms of lower taxes on long-term and short-term gains, I think the equity cult in India has developed phenomenally. And if it was not for the local Indian investor, we know how the FIs have been selling last 18 months. And we could have seen how the markets would have performed if it was not for the domestic investor. So there is merit in incentivizing domestic flows into equity markets, because that is how the economy gets built. So I'm very sure, I think the governments before this and the present government have all been cognizant of this fact. And we are very hopeful that we are still in a stage where the country needs a lot of capital infusion. And domestic capital is a long and very stable capital, and the incentives which are needed to kickstart, I would say, to sustain this momentum of equity cult, that should continue.
Aabha, the markets have opened and it's clear that Adani Enterprises is down this after the FPO.
Let's pull up that stock, but also markets on budget morning up about 0.5% or so, steady. And I want to come back to that point that Geoff made just before he signed off, because he said this year is not really going to be so bad. If I take a look at almost every brokerage report that's come out in the last couple of months towards year end, they're still predicting that things will fall into place, Udayan. And I'm curious.
Don't they always?
They don't. That's just what I wanted to hear, because we've heard this for almost an entire year gone by. It will, it won't, it will, it won't. And we started the year on the same note. And the brokerages seem to be completely refuting all the other factors that are clearly in front of us.
They'll always talk their own book. I mean, what else can they do? I mean, I have some sympathy for why they put out those bullish reports every morning or every year. And I've seen it for more than 25 years. It's the same every year. That has no bearing on what the market will do. I think the point that Geoff was making is important, that India became very much more expensive than the rest of the emerging markets. And that process of equalization, we like to think sitting in India that we are so special that we will go to the sky, doesn't matter what happens to other markets around us, but the reality is somewhat different. So I think a little bit of equalization has happened. As Geoff was pointing out, emerging markets as a group are up 8% in January, 1 month, and India is down nearly 4%. So a 12% equalization of valuations has happened already in just 1 month. So I think we might see a little bit more of that happen as China comes back into play. See, on the 31st of December, a lot of foreign investors had this choice. They had been selling China down. China had become ridiculously cheap. So this year, as China opens up, is the money going to go to China or going to India? And I think a lot of them are saying more money should go to China than to India. Right. We have not helped our cause with the Adani episode. There's no question about that. And given this backdrop, if something happens on capital gains, that's one more straw on the camel's back. We don't need it today from a market perspective. So I think India is okay. I mean, our companies are doing okay. Our valuations are high. And therefore, chances are we'll have another ordinary year in the market, which is not a down year necessarily, but maybe a 5-6% year is possible.
Just one point to add here, and Saurabh, we've reported this in the latest issue of the BT magazine as well. Two important surveys, Udayan, one by PricewaterhouseCoopers and the other by the World Economic Forum, just a fortnight ago on the global CEO mood. And one of the key things that came out is a record level of pessimism as far as global CEOs are concerned about the global markets, and that also includes market voices. Indian CEOs far more upbeat in comparison. What we are also picking up, Saurabh, is that today's budget, and before we go back to Sunil, I want to bring you in for the macro perspective, is likely to talk about a 25-year long-term roadmap. The CA already spoke about $7 trillion by 2030. Some people said the goalpost is now being set for 2030, but a broader term roadmap for 25 years, Prime Minister has been talking about Amrit Kal. How would you square it all up?
Yeah, I mean, that's the whole point of our anniversary issue, which we are just about to put out this week. The road to India at 2047 in that sense. So if you look at a broader horizon, Siddharth, of 25 years or even till 2030, I think the stars are aligned in India's favor broadly. And I think IMF also yesterday seemed to suggest that India will be a bright spot in the next couple of years and beyond. So I think overall there are enough sort of tailwinds for India. There is this whole what Mr. K.V. Kamath calls the digital super cycle that is going to play out over time, and it is really a big advantage for India if you look at the entire jam trinity which has happened and the kind of overall, and I'm talking very macro now, if you look at the overall digital ecosystem which has been built out, which in fact other countries are now emulating, whether it's UPI or other things. So I think overall the digital super cycle, as well as the cleaning up of the balance sheets which we spoke about earlier in terms of both banks as well as the corporate sector, I think all of these together is setting India up for a good run. There will be global headwinds, severe global headwinds, I suspect, this year, and we really don't know. Nobody really expected the kind of headwinds we had.
The
over
banana
the last
peel
year.
is not being thrown by us.
Exactly. And I think the FM alluded to it in her last year's interaction with us when she said much of this crisis will be coming from overseas, and I'm not trying to shift the blame, but that has turned out to be the reality. So
before Aabha takes a question with Sunil, viewers, I want to say this, February 6th, please watch out. We'll be back with one of the best post-budget analytical events that you'll see here. Aabha, you had a question for Sunil.
So, I mean, Sunil, what are we watching out for today then, from a market standpoint? I mean, every sector is out with its wish list, but thematically, what do you think we'll see focus on? Capex push, perhaps, on renewables, manufacturing? Are you looking more at, pockets like real estate and housing? What are you focusing your attention on?
What you mentioned is obviously things which are there to be looked out, but it's already been discussed so many times before the budget. I don't think anyone is going to be surprised by anything what you said. Obviously, infrastructure, development, growth is going to be a big push, and I think the Prime Minister, as well as the economic survey which was released the 31st of January, did mention all of this. So yes, we are going to look at this. Good thing is tax collections have been buoyant, and I think that gives the Finance Minister additional room maybe to do something for the middle class in terms of some direct tax tweaks, as well as have enough room to fund the development. I think railways is going to be a big focus. We have already seen last 1 year massive strides being taken by the railways in terms of better trains, faster trains, even on the wagons, and the cargo movement. I think there has been massive focus, and I think that is going to be a big segment. We do believe, as was mentioned, that the Prime Minister wants to lay down a road of 20-25 years. And I think that is a great move because, every year you can't keep on tweaking, and every year you can't keep on changing stuff. And if you have like a 5-year roadmap and a 10-year roadmap, I think that is what we have to look at. Other than that, I think budget has to some extent reduced its relevance in terms of stock price movements, except the capital gains, one way or the other. I think the market might have a move. Other than that, I think most of the things have become now a normal sort of a roadmap being kind of. So we don't expect anything major. The only one good thing is because of what has happened with the last 1 week, positioning from equity participants has been very, very light in the run-up to the budget. In fact, over the last 20-25 years, I have never seen such cautiousness and such light position in the run-up to the budget as we have seen now. Normally, you have a budget rally and a lot of optimism. This time, in fact, as was mentioned, India has seen a negative 4-5% in the last 1 month in the run-up to the budget. So I think positioning is good. We are optimistic, and I do differ in the sense that it's not that 1 month India has underperformed and everyone will rush to China and so on and so forth. Last 10 years in dollar terms, the Chinese economy has grown much faster than India, but markets there have been negative on an absolute basis last 10 years. And despite whatever has happened in India, India has more than doubled in dollar terms over the last 10 years. And the same is the case with emerging market. Emerging market as an asset class has been zero over the last 10 years, because for one country which does well, there are 2 others which don't do well. So, my view is that it's a matter of time before, flows come back into India. And I think what the world has noticed is that democracy is the place to invest. after what has happened to Russia and what keeps on happening to China in terms of their clampdown on their digital companies and real estate companies and so on and so forth. I think the world needs a stable, political environment, and democracy is the place to be in.
Rajat, the two other themes which have done quite well over the last few months, and they pertain to what may happen in the budget too, are defense and railways. Do you look at these two sectors at all, and do you think that the government's emphasis on outlays for this sector opens up any kind of opportunities for investors?
Yeah, no, railways I don't, but the defense, yes, I have investments in Bharat Electronics, and I think definitely in budget the government will announce some higher allocation to defense, because this has been key core focus area for the government. But just before I get to that, coming back to the point of valuations and high valuations of Indian markets. First of all, I don't think Indian markets are so expensive right now. We are trading at a price earning multiple of about 20.5, which is actually lower than the 10-year average at where Nifty has traded. So valuation-wise, we're fine. And also, defense is one area to look out for. But just to first of all, just to give a disclosure, safe to assume that me and my clients, we all have positions in the stocks that I'm talking about. I think the stocks to focus on today would be stocks from, not really defense, but stocks from oil and gas, because there would be some announcement on windfall tax. So I think ONGC is a stock to look out for. There'd be some announcement on taxation of tobacco. So ITC would be a stock to look out for, because if the FM says nothing about cess or higher taxation on tobacco, this stock could do well. Their focus has been on, we are far, I was listening about renewables and stuff like that. We are far from renewables. Right now, the government's focus is to blend more and more ethanol with petrol. So I think sugar companies which manufacture this ethanol, those stocks could run up today. So, these are the stocks, whether it's Dhampur or Bajaj Hindustan, these are the stocks to look out for today. But over a longer term, I think, as I said before, pharma, oil and gas, and FMCG, these are the sectors you should be looking to buy more into.
Rajat, thanks so much for joining us on Budget Morning. Great getting your view on what's expected today. Markets up 0.6%. I don't know if this is relief post Adani or if this is. I can't imagine it's pre-budget. We saw that one year, I think 2020 was when we saw that massive post-budget rally. But since then, it's been pretty regular trade on budget day. I mean,
At best, a little bit of a flutter before and after, but after that, it's forgotten. I don't think it changes the course of the market in any significant way, and this time should be no different. I'm wondering, since the budget speech is prepared much in advance, whether the FM will say something to settle the nerves on the Adani issue. The government has been very quiet on it, by the way.
Yes.
But the budget is a great place for her to just make a statement that no need to panic. We are in control of the situation. Somebody wrote a report, some stocks crashed, but nothing like Satyam Computers has happened to derail the global thinking on Indian corporate transparency or accounting standards or anything like that. I think a proactive finance minister would make such a statement, not to defend any group as such, but just to say, it's business as usual. I think that would be very settling.
Sunil is here with us. Udayan.
Yeah, Sunil, do you think something like that is coming or necessary or likely in your eyes? Some mention of the drama of the last, or some allusion to the drama of the last 7 days?
Then I'm a firm believer of free market economy, and we should just let events play out. The only thing is, the events, obviously, it's a global world, it's a free world. As I said, we are a democracy, we have freedom here, and I think we have to respect the views of every market participant. Having said that, our view is that, a lot of the sectors which this group, works on is related to the infrastructure creation. We can see it. So, we can all have difference of opinion as far as valuation is concerned. But I don't think these events have shaken any of the institutions in a big manner. But having said that, I don't have a view. And I do believe that, free market is the way to be. And that's how the Western world, particularly the US, has progressed where it is. And I think that is the route which India should also take.
Frankly, Udayan, I think, on this point about whether the finance minister will make a statement, I feel it's highly unlikely because, the way it goes is that they will tend to say that this is a private company which is dealing with a private problem and the government has nothing to do with it, and budget is, it will go on, and I don't think they will just not. I don't see that happening, frankly.
And actually, they would be giving ammunition to the opposition if they did that thing.
Absolutely.
They're coming up in defense of their cronies.
Immediately, correct.
Absolutely. Aabha, you had one final question for Sunil before we let him go.
Just to play devil's advocate, Sunil, and since we're talking about the economic survey, even the survey alluded to the fact that the onus was now on corporates to really push through with that capex or planned capex. Now, we've been hearing this for at least a couple of years, where the government's been time and again bringing up the fact that it's really up to India Inc. to now deliver on some of those plans. Do you see any hiccups there? Because the minute there's any kind of nervousness, whether it's on the global front or even any kind of uncertainty around the markets and the economy, we do see corporates holding back.
So I think that there is no uncertainty on the economy. In fact, when the world was struggling and debating whether they will have 0% growth or negative growth in India, we were debating whether we'll have 6.5% or 7%. Even the IMF's recent, forecast has India as the fastest growing economy in 22, 23, and 24. So domestic growth is been very good. Agricultural produce has been good. After the harvest, we believe that there is going to be a good demand scenario from the rural side. We can see massive push on infrastructure, which we discussed earlier. So I don't think growth is an issue in India. And on the contrary, the world is also starting to look better in 23. So all the headwinds which we had in 22, whether it was, gas and oil prices shooting to the roof and, inflation hitting us and the recession and all those have become tailwind. You have Europe, which is now coming back because gas and oil prices are now at an 18-month low. And we can see green shoots when we speak to companies who are focused on Europe. We have China opening up. So in fact, you will also get support from global growth. And this China plus one and manufacturing in India is for real. I think we should pat ourselves and also the relevant ministers in the government for pushing this culture of manufacturing. When we speak to companies, I think exports are becoming a key focus area. So I think the capex, both from the government and the private sector, is only going to get strengthened from this. And if there is or there are a few sort of incentives additionally in the budget of the likes of PLI, I think we believe that 23, 24, 25 is going to be a great 3-year period for capacity expansion and addition in India.
All right, Sunil, thank you very much for your time with us today. Hope to catch you again after the budget. But thanks very much once again. Deepan Mehta, founder and director of Elixir Equities, is also with us, and we'll also be joined by more guests. Deepan, morning, welcome to Business Today Television. Full house here. And as the clock ticks down, the question that I would really want to start off with is the impact of the Adani Hindenburg episode now over. The FPO is done. Retail gave it a miss, but we saw what happened when it came to institutional buyers. And like some people are saying that the group lost $75 billion of market cap to raise $2.5 billion. Have the markets now moved on beyond that?
I would think so. First of all, good morning and thank you for having me on your show. I would say that yes, I think gradually this news will go more and more to the background. And we have a major event, the budget today, and then there is of course the FOMC, that's the Federal Reserve meet, and what their call is on interest rate. I think that will hog the limelight and the attention of the market players. And this particular, will be more in the background going forward also. So let's hope that the important issues about the economy and the fundamentals, those are more in play rather than a research report on one specific group.
Morning, Deepan. Good to speak to you after a long time. What will make it a good budget in your eyes, or not such a good budget?
Yeah, well, I think all the sleepless nights prior to the budget are to do with capital gains. And I will take a minute to explain why it is so important. if you go back into India's history since we opened up, it's the FIIs who have been always, dictating the trends in our market. When they would come to sell, you would be down 10, 15, 20%. And there was no real counter force against the FII. The domestic institutional investors were never so strong. But in the 2020s, right from 2020 onwards, we have seen a surge of retail investments coming into the stock market, and they have provided us adequate counter force to the FIIs. They have absorbed all the FII selling. A large part of the retail inflows are coming in based on favorable tax regime, lower capital gains tax for long term as well as short term. And that's a very important incentive to keep the retail flows to coming into the capital market, primary as well as secondary. And any tinkering over there, if they raise the interest rates, increase the period, then it's going to make equities that much less attractive. And then if you have lower retail flows coming in, then again the FIIs, who are anyway the short-term price makers, there will be no one to absorb their selling pressure if retail flows start to flag off. So from that point of view, having the same consistent capital gains tax structure is extremely important. It may not generate much revenues, but from a sentimental perspective, it is very important to maintain stability over there and continue to have these incentives which are there on the capital gains front for retail investors. So I think that's the real central point of this budget. Of course, I think there will be a lot of discussion on plan expenditure or perhaps some tinkering or relaxation on the personal taxation rate. But I will heave a huge sigh of relief if there is no announcement at all on the capital gain structure as far as equities and mutual funds are taxed.
You know, Aabha, what Deepan says is right, that if something comes about, the markets will react and people will be very disappointed. But I have a very different point of view on this subject. The thing is, why should the government tell a retail investor that you should hold equities for less than 3 years? All of us know equities is a long-term asset class. The SIPs which are actually coming in and supporting the market are presumably long-term investments. They are not coming in this January to be sold in the next March. So why should the market be so disappointed if the long-term capital gains threshold becomes 3 years from 1 year? You are actually encouraging longer-term investment by saying hold on for 3 years for that long-term capital gains tax. So that's point number one. The other thing is, I've noticed over many, many years that if there is money to be made, people will buy an asset regardless of what the tax is. You and I put money in fixed deposit, we pay 35-40% tax, but do we not put in for the 7% return? There is far more money today in fixed deposit than in the stock market. So where there is a return to be made, whether the tax rate is 10% or 15%, nobody's talking about 40% tax, 10 going to 15. I think the money will still come into the stock market. There will be a knee-jerk reaction. People will say, oh, it's the end of the world. Eventually, they will come around and buy the same stocks. And if one goes to 3 years, that also is fine because it's encouraging long-term investments. Today, it will seem bad. Brokers will hate it. Investors will hate it, but it's not the end of the world.
That's a great perspective. And at this stage, I want to also welcoming Himang Jani, Group Senior Vice President at MOFSL, Motilal Oswal Financial Services, and Deven Choksi, founder of KR Choksi. Udayan, I want you to begin
please
with.
go ahead, please go
Okay,
ahead.
Deven bhai, Hemang, welcome. You heard Udayan's view on taxation. Your response to that, Hemang, to start with you first.
Yeah, good morning, everyone. Thanks for having me. I think what Udayan brought about was a relevant point, but we have to also understand that today the penetration of investors' money into equity and mutual fund put together is too less, and there is not much of awareness or understanding of that at a broader level, though the number of investors who are coming into the system has increased in the last 2 years. So when you have such changes at a very short interval, there is going to be some negative perception about that, though in terms of the tax per se, or if the tenure is increased, that would not necessarily be negative for the investors. But if there is frequent change and people are not able to understand what exactly the thought process is, that could be sentimentally negative. So there has to be some sort of a stability and consistency when it comes to the capital gains tax regime, and some incentive for more people to come into the system.
All right. Devan, let me get you in as well, and you must be very relieved that we're not talking about Adani this morning, because that's all we've been talking about, with you for the last 3 days. But, broadly, we've been discussing whether or not markets are going to, how they're going to react to the budget, assuming perhaps that we have some good news in store. We don't want to talk about what happens if there is not. We're already up 6, 7 tenths of a percent. What are your big expectations this time around?
Good morning, Aabha. Well, I think the budget this time around is more going to be allowing the allocation of money, I think, in the areas in which the government has set the priorities. Already, I think a big vision picture of 110 lakh crore for investments in infrastructure over 10 years has been announced. 7.5 lakh crore has been allocated last year in the budget as a first year to start with. This year, given the kind of robustness of tax collection, this amount is expected to be on a higher side. And also considering the fact that a year ahead of election, obviously government may want to pump in as much amount of money as possible in infrastructure to actually bring out the economy. So this is one big expectation that yes, the continuity of allocation of money towards infrastructure will continue, and probably I think larger sum of allocation of money will happen. Second main area where I believe is the area of monetization of assets. I think national monetization policy has been announced, but honestly, I think nothing much has happened in the last year, even though the allocation of money or allocation of, or rather, I think expectation of money, I think has been created about 1,60,000 crores. Nothing has happened out of that. I believe that I think there is a need to revisit this particular structure, and probably I think some kind of a SPV structure which might get announced, wherein it would get funded from the public resources for these assets, I think, which the government is unable to sell. I think so that is one possibility which is there. And third possibility which connects to the rural India is going to be in the area of agriculture. The farmers processing organization has been already spelled out, and the government is of the firm view that this particular organization, along with the cooperatives, will require to be made more strengthened, rather for the purpose of, I think, bringing up the rural masses and also giving more amount of power in the hands of the farmer. I expect, I think, the amount of allocation of money to happen in this area as well. Put together all these three areas, I would think that on one side, the balance sheet of the government will remain strong if they end up, I think, implementing national monetization policy. And other side, infrastructure spending, and I think the farmer processing organization. These two areas could leave more amount of income in the hands of individuals, which will ultimately result into higher amount of spending. And it will benefit the corporate sector, both industrial products as well as consumer products. So these are a few expectations that I am having.
This is where the disappointment is coming. Devan is right, about this asset monetization thing on which we have not made significant progress. My fear is that while this should happen, it may not happen this year, because as you get closer to the elections, you want to give the opposition less and less ammunition to play with. They should not be a slur. They're selling the country, they're selling assets cheap to their own cronies, etc., etc. So I think as we get into 2024 election, the space for asset monetization and disinvestment or strategic sales of any kind will probably shrink. So what you may see in this budget is some focus on capex, but I think the government will try to move towards the consumption side also by stimulating more expenditure on NREGA, Aabha Yojana, those kind of schemes, which is not bad in itself because the lower end of the pyramid is still hurting. There's nothing wrong with that. So I know the last time's focus on the budget, post-budget too, was very much on capex-oriented stocks, the investment cycle picking up. So I'm wondering whether this time post-budget you will find that maybe the objectives of investment and consumption have been somewhat more balanced, and therefore some of the consumption stocks may also not do too badly.
Udayan, do you expect PLI to be extended to more sectors this time? We've not talked about PLI much.
No, this is going to be a big thing. Already it has gone up to 14 sectors or so, and this I think the government is very keen on, because it's not just important for stoking manufacturing, which we need. It's also very important for employment, and employment is an Achilles heel. I mean, we don't talk about 9-10% unemployment in India, but it's a ticking time bomb. For all the good things everybody says about India, and you were talking about it upon the longer term, I think this is a big problem area. We are not going to imagine what the unemployment numbers could be in 25 years' time. I mean, it could be billions or millions of people.
I think you mentioned this in your column also, big but not.
It worries me a lot. So unless you get your PLI and manufacturing base growing, I think he will not resolve this issue, and I'm really hoping that she makes more strides, takes more strides on the PLI front.
Particularly on the MSME side.
Correct.
Absolutely. Hemang, moving just beyond today's budget as an event and looking further ahead, in terms of the government's focus, do any particular sectors emerge as possible investment opportunities in the coming year?
So clearly what we have seen is that in the last 2 years, there is a thrust on the revival of the capex, and particularly the government side capex. We've seen increased activity in the last few months as well in terms of awarding new contracts on the roads and the infra side. So now that there is a bit of a slowdown on the consumption side, particularly urban as well as rural, there has to be some sort of a aggressive push to have more allocation for the capex, so that that entire growth which has started in the last, let's say, about 1 year or so sustains over the next couple of years. So definitely there is an expectation that this entire cap goods, defense, railways, that thrust continues, and if there is a slowdown in terms of the growth, last year in the budget the capex growth was almost about 25%. So if that actually comes down, that would definitely have some negative sentimental impact, and there is a need to sustain that.
All right. The point about PLI, Udayan, just to bring in some data that's been prepared by the BTTV team, Karishma Sudani led that, on PLIs, roughly $23.5 billion that are allocated. But look at the status in terms of the first year of revenue. FY22 mobile PLI delayed by 1 year. Now this is COVID, not necessarily blaming the government here. Medical devices delayed by 2 years. Telecom 2 years. Pharma by 1 year, Saurav. Then IT hardware, the scheme reworked. Specialty steels by 1 year. Battery revenue target from 2025 only. Devan bhai, the point that I'm trying to, we are trying to bring out here is that many of the government schemes, and this is, I would say, Modinomics really, which is our budget theme as well. Modinomics is not about short-term quick fixes. It is about proposal schemes that take time to implement, and I am obviously keeping the social sector spending out of it, and also the brave call really, Devan, if you could comment about it, to unwind the free food scheme in pre-election year. Devan Chokshi.
Yeah, Siddharth. In my viewpoint, I think, yes, you are absolutely right. I think some of the schemes are probably direction oriented, and immediately I think implementations are not happening. But on the ground, I think the government is making serious efforts to basically create the infrastructure facilities for these schemes to probably, I think, get off the ground. Gati Shakti Yojana, national logistic policies, I think are some of the examples where probably I think government is seriously intending to provide the infrastructure support to the industry, which ultimately I think wants to produce and sell as well. I agree that I think some of the items I think which we probably thought of in the earlier budgets I think would get implemented hasn't happened in the immediate year. But I believe that since the direction is clear, and after talking to corporates in the industry, I believe that I think their implementation is going to happen eventually, which is also being seen as a progress in the current year. So yes, I think whether the 14 sectors plus I think new sectors will get covered in this particular budget, one will have to see and what kind of amount allocation it will have. But I really remain positive on this particular possibility.
All right, fair enough. Let me just go back across to Hemang as well and pick up that point on consumption that we were discussing that Udayan brought up, Hemang. Just when we thought that numbers may be squeezed because of inflationary pressures, it would be a huge boost to see some incentives coming in when it comes to rural spending and helping that to lift at least the pockets, for example, FMCG consumption and so on and so forth. Discretionary is still another question, but when it comes to rural spending, are you also bullish on what we might see in this budget?
Absolutely. I think both in terms of discretionary consumption as well as supporting the rural economy in terms of additional support on the agriculture side or on various other schemes that the government is carrying out. I think there is a need to sustain that because there is a definite sense that there is some slowdown when you look at the management commentary from some of the consumption companies, whether it is HUL or Godrej Consumer or some of the discretionary, names, we do see signs of slowing down. So this requires, some support from the government to sustain that, growth. Also, the fact that there is some sort of a cooling off in the prices of the agricultural products, particularly wheat and fertilizer and many other things. So that to some extent will help, but definitely some support is required.
All right, so some support required on that front. Just looking at the banks this morning, and they're on a roll ahead of budget. And, again, even in the economic survey, even otherwise, everyone's talked a lot about the massive cleanup, how banks are well capitalized. Any expectations when it comes to the banking pack, particularly perhaps on the PSU names this time around, Devan?
Of the government that initially they funded these PSU banks, I think strengthened their balance sheet, ended up, I think, cleaning up the balance sheet with all the non-performing assets. And also, I think with the improvement in the economic condition, I think they have also been able to strengthen the liability side also. Last year, I think, fortunately, in the second half, probably, I think we have started seeing the symptoms. And this year, I think it has already started getting into the increasing the corporate credit growth rate, which has basically started helping the PSBs, particularly their SME and MSME segments of lending, has started improving. Given that situation, I would really remain hopeful about, I think, they further consolidate PSBs. It is important that if we have to achieve the higher dreams of $5 trillion economy or $10 trillion economy in 12 years from now, it is important that I think the banking sector should be given a size and a shape. Probably PSBs are too fragmented, too small, and as a result of it, they are quite vulnerable to, I think, the kind of volatility or the economic conditions at a given point of time. So from that perspective, the consolidation of PSB is absolutely important. And I would probably expect that the budget gives some kind of a direction to the consolidation part of the PSB this time around.
All right, Deven, the finance minister has reached Parliament. We are now on a clock, just about 60 minutes, and hopefully we'll be able to hear the finance minister sort of without any major disturbance. There have been some warning signs, but it's time for a break. I'm going to thank my guests for being here with us. We'll be back shortly. Viewers, do stay tuned in. You're watching Business Today Television.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team.
It's 2023, and India remains the sole shining star in the global economy. So what lies ahead as the Modi government prepares its last full budget before the 2024 general elections? Join the biggest names in business journalism, decoding the jargon with the biggest newsmakers. From the most credible, in-depth analysis of Budget 2023, tune in for Modinomics 2023 through the month. Only on India Today and Business Today Television, gold standard of business journalism.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team. Only on India Today. The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team.
It's 2023, and India remains the sole shining star in the global economy. So what lies ahead as the Modi government prepares its last full budget before the 2024 general elections? Join the biggest names in business journalism, decoding the jargon with the biggest newsmakers. From the most credible, in-depth analysis of Budget 2023, tune in for Modinomics 2023 through the month. Only on India Today and Business Today Television, gold standard of business journalism.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team. Only on India Today. The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate. Nirmala speaks, we decode in real time. Unrivaled, unmatched. Udayan on your side. Budget 2023 with India's #1 budget team.
It's 2023, and India remains the sole shining star in the global economy. So what lies ahead as the Modi government prepares its last full budget before the 2024 general elections? Join the biggest names in business journalism, decoding the jargon with the biggest newsmakers. From the most credible, in-depth analysis of Budget 2023, tune in for Modinomics 2023 through the month. Only on India Today and Business Today Television, gold standard of business journalism.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence.
A very good morning once again, and welcome to Business Today Television Studios on Budget Day. Just around 55 minutes for the scheduled time for the presentation of the budget. The cabinet meeting to take place anytime soon. And as I introduce our panel, I also want to introduce my co-anchor Aabha Bakaya with me today, and our resident expert and the editor of Business Today magazine, Saurabh Majumdar, also joining us to discuss the macroeconomy backdrop for Budget 24. R. Gopalan, former Secretary of Economic Affairs, a man who has prepared and been part of many budget making exercises. We also have Ketan Dalal, Managing Director at Catalyst Advisors, one of the foremost tax experts in the country. Also with us, Saugato Bhattacharya, EVP and the Chief Economist at Axis Bank. We'll also be joined by other guests and our reporter colleagues, including Chetan Bhutani, just in a while. But viewers, before we go across to our guests, just one small bit of budget trivia. This is going to be the last budget in the present parliament. And I wonder how many of you viewers have actually been to that venue. I, as a reporter, have had occasion many times to be in parliament, and that's one part of our history, a new India, Naya India is being created. Let me go across to Mr. Gopalan for that question. Mr. Gopalan, you've been in the budget team, you've been in quarantine. I imagine you also had some halwa several times over with the budget making exercise. What is really cooking this time, or what has been cooked at North Block and will be presented to the whole nation in just under an hour from now today?
Okay, I mean, I have been part of many of the halwa ceremonies and budget making, budget preparation, as you mentioned. This year is going to be, though it is a pre-election year budget, I think thanks to macroeconomic considerations, which is government very strictly adheres to, and thanks to the external disturbances on the economy which is taking place, the government will be very careful in giving a budget which will be growth oriented and ensure that compassion is also put in for those who are at the lower strata of society. So this is something I think is going to happen, and they will also look at seeing some of the structural deficiencies in the economy, how to address them. For instance, the manufacturing is in a very, very bad state. Its growth has been only just about 3.32 in the last about 5 years on an average. Then its value addition is going down significantly, still having 17% of GVA. We are looking at a 25% to ramp it up. How are we going to get that done? How the informal enterprises are going to be propped up to ensure that they are able to take part in the growth story. And ultimately, they will all look at the SMEs, how the small scale enterprises are in a very, very bad state, and how to address them. These are some of the issues, I think. On top of it, employment is another issue. I think these are the major issues which this budget, in my view, is likely going to address.
Okay, Mr. Gopalan, we'll take up all those points one by one. At this stage, I also want to welcome in Sumant Sinha, Chairman and CEO of Renew Power. Sumant, welcome to the Budget Day broadcast from Business Today Television. I was speaking with you at Davos just a few days back, and the global backdrop was pessimistic. Indian CEOs like you, very, very optimistic. What are you penciling in terms of your own key expectations really from this budget?
Yeah, what I expect from this budget is, first of all, of course, we know that it's an election year. So that is something that is to be kept in mind. At the same time, there are a number of global macro uncertainties, which, of course, we all saw at Davos as well. The world is still in an uncertain place. We don't know how things are going to shape up. I think in this environment, it will be very important for the finance minister to hew a very prudent path, which is something that she's been doing for the last few years already. For example, during the pandemic, our fiscal deficit went up to 9% but nothing compared to the kind of stimulus package that some of the Western countries gave. And of course, that has now come down substantially to 6.4%. I would hope that she continues on the path of fiscal consolidation and takes it down to sub 6% this year. I think that would be very important. It's also important because, of course, as you know, inflation has been high, therefore borrowing costs have gone up. And we have to make sure that borrowing costs don't go up any more than they have to, because that, as we know, impacts both consumer demand as well as investment into the sector as well. So I think that is very critical. I think in addition to that, it will be great if the FM can continue on the path of giving more incentives for the PLI schemes, which are encouraging manufacturing and will continue to grow in the economy 2-3 years from now. I think that given where India is right now on GDP growth and on inflation coming down, I think she really has the room to be able to spend a little bit more in some of the key sectors without busting the fiscal deficit. One of the key sectors that I would hope that she does spend more on this time is the green transition sector, because we all know that that's a path that the government of India has taken, which is to encourage and foster the creation of a green economy. So I think there are a number of ways in which that can be done. So I would hope that she does do that, okay, which is to spend a lot more on the green economy. So anyway.
Suman, just hang in there. Aabha has a question for you, but before that, I just want to do a quick dip in quickly with Shogato and Ketan in quick succession. They've been both listening in. Ketan, quick snappy question. Tax changes, finally some relief for the Aam Aadmi or the middle class when it comes to income tax?
I think there is, of course, the expectation that given the inflation of the last few years, now whether it is standard deduction, Siddharth, or whether it is raising the exemption limit, so that should hopefully come through in this budget, because it will also release funds for consumption, and of course additionally the tweaking of capital gains. But additionally, if I may just make a point and then pass it on to Saugata, the 43% rate and the 39% rate, and of course that's at much higher levels, and that doesn't deal with the Aam Aadmi, also is extremely high, and one hopes that something happens on that front also.
Aabha and I were in conversation with Dr. Ashok Lahiri in the morning, and he said India is not taxed enough. I joined issue with him on that. Shogato, quick point, and then we open up. Do you think where will the balance fall? Populism versus continuing prudence, the hallmark of Modinomics?
Without question. Thank you, Siddharth, first. Without question, fiscal prudence. Macroeconomic stability, I think, will be the hallmark of the budget. Really, India does not need any form of fiscal stimulus except for a few sectors. The data that we are seeing shows that economic activity is so strong. January GST collections was 1.56 lakh crores. Yesterday, the 8 core sectors was 7.4%. So, I mean, even manufacturing seems to be improving. Electricity consumption has led this growth. So I really don't think, I mean, one of my fellow panelists mentioned the high interest rates. I think that should be the biggest focus of the budget. I mean, to get interest rates down, RBI is almost done with rate hikes. The global economy is beginning to look bleak. So the budget should build in buffers for any external shocks that need to come in without without much thinking for further stimulating beyond unwarranted levels in the economy.
Sure. Sumant, coming back to you, and you know, you said it would be nice to see some spending. That's putting it mildly. We all know renewables is a big push for the government, and the way they're also seeing growth in the economy. We are expecting to see a fair amount of attention given to that space in the budget this time around. Is there any way that one could look at quantifying what could possibly be expected in the kind of outlay they announced this time?
Simply because the government, you know, has been continuously announcing a number of programs over the last several months to encourage renewable energy. Yeah. For example, the National Green Hydrogen Mission was announced with an outlay of 20,000 crores. Before that, the solar PLI scheme was announced with close to 19,500 crores as well. So there have been a number of these schemes that have already been announced. I think the kind of thing that we can hope to see in the budget perhaps is another PLI scheme for electrolyzers specifically. To make green hydrogen. One would hope that there would be something around making batteries more viable. Right now, the tax rates on batteries, both GST and customs duty, is about 30%. So that is something that can be brought down to 10%, which is, by the way, what it already is for electric vehicle batteries. So there's no reason why utility scale batteries should not be taxed at a lower rate as well to encourage that whole sector to come in. I think further funding can be announced for the offshore wind sector, which we also need to give a fillip to. Right now, as you know, offshore wind perhaps is more expensive than it needs to be, so a viability gap funding for encouraging offshore wind perhaps is something that can be done. And I think one of the things that we also require is a solar PLI scheme only for polysilicon manufacturing, because that's an area where India can really emerge as an alternative to China, which is really cornering the market in solar, in polysilicon as well, as it is for a lot of other things also. So I think those are some of the few areas that perhaps the FM can look at from a green standpoint. And of course, I think one more thing is the creation of the carbon markets, which the Energy Conservation Act has now talked about, but perhaps taking that a little bit forward in terms of how that might be concretized.
All right. Suman, thanks for that. Lots to watch out for in the budget this time around when it comes to renewables, and PLIs sort of clearly across sectors are going to be key to watch out for.
Yes, Aabha. I have in fact a question for Mr. Gopalan, who rightly spoke about the MSME and the stress there. Mr. Gopalan, I think, you know, there has been a lot of talk about PLIs, of course, and rightly so. That's been one of the major, you know, seen as a game changer for the manufacturing sector, and the government is very keen on it. But as far as the MSMEs go, do you think the PLI scheme needs to be really reoriented in some form to really boost the MSME sector? Because there's a lot of talk about how much exactly is the value addition, which some of the existing PLI sectors are really getting into. So is there a need to sort of focus more on the MSME sector as far as PLIs is concerned?
No, like many of the sectors where, I mean, Suman just mentioned some of them, and others have also mentioned quite a lot. I think PLI is something which can be applied to some of the MSME sectors to make them little more focused on value addition, which they should really do. I have 2-3 things on MSMEs apart from what I just mentioned. One is how to improve their efficiencies. We have been looking at them as something which is kept at arm's length, but we have not really done measures to improve their efficiencies. Second, how to improve the skills of the people who are operating on MSMEs. That also we have to focus on. Third, despite all the credit-linked programs, the access to credit for micro level just has improved, but it has not gone the whole hog. And capital destruction which has taken place as a result of GST as well as on the demonetization has not been addressed so far as the household enterprises are concerned. And lastly, the access to market. How do you ensure that the MSMEs are able to access market freely and they focus only on their manufacturing without getting bothered about HR issues, finance issues, and accessing market issues? There's a lot of work going on now at this point in time on access to market for MSMEs, but that is an area where we need to really focus a little bit more. Lastly, in this budget, I hope there are not too many taxes which brings down or constricts the ability of MSMEs to operate, freely, and how expenditure is going to be done this time on projects. Is it going to be big railways, space kind of a projects, or it's going to be projects which are down to this thing at a smaller level, at village, towns level, which will enable MSMEs to survive and do well. I'm going to look at all these things to see whether the focus of MSME is correctly addressed in this budget.
Okay. Mr. Gopalan, thanks for that. I'll come back to you. I also want to introduce at this stage Arindam Guha, partner and leader of government and public services at Deloitte India. My colleague Karishma Sudani is also mic'd up at the CII, where a lot of Indian industry will be speaking about the budget. We'll also hopefully get Chetan Bhutani to give us some infrastructure related points of view. Ketan, I'm coming back to you. In the previous session, we had several market experts and Udayan as well and Aabha, and one of the key discussions was around the feasibility of the timing of any changes to capital gains, considering what has happened in the previous week from a market point of view. Now, I'm not asking you to comment about markets, but about the logic and need to do it, because this different classification has evolved over time and there was a certain logic behind it that got entrenched over the years. Ketan.
Yeah, so Siddharth, so there are two aspects to the capital gain thing. One is the need for simplification, and then there is a need for rationalization, and both necessarily don't converge. You can have a simple thing, but that may not be rational. But I think simply on the complexity of it, Siddharth, we all know there are different rates. You have 10%, you have 20%, then you have 15% for short term. And I understand short term has to be seen separately. Then you have different holding periods, different for unlisted, different for listed, different for listed off market. Even for people familiar with tax, as somebody like me is for the last 3 decades, it's a struggle to even understand what rate to apply. And on top of that, surcharges, cesses. So I think there is a clear need for rationalizing capital gains tax and perhaps at least make the holding period one standard one, and even the rate, even at the cost of some tweaks, which may not necessarily look on par asset wise, but just make it relatively simpler with one rate, maximum 2 rates, as opposed to the plethora of things that are going around. And I think there is a likelihood of that happening from what I've heard, but we'll have to see in the next 45 minutes or 1 hour and see what happens on that front. But there is a clear need.
Arindam Guha, I'm coming to you on the broader point of the government's focus. The debate, and a rather endless one so far, has focused on whether it will be finally balanced and whether the expenditure priorities will remain. From your own perspective, what is this last budget of the current term of the government going to deliver?
I think, it will be the same tightrope walking which the government has done successfully over the last 2-3 years. So we do expect fiscal prudence to continue. At the same time, we expect the government to continue its capex spending, which has been significant over the last couple of years, as we know. But I think a couple of key expectations which I hope are met. If you look at, let's say, the total capex infrastructure spending on infrastructure, it is around 7 to 8% of our GDP currently, which would be around 17-18 lakh crores. Now, Government of India bears a significant part of this. Last year itself, the budgetary outlay was 7.5 lakh crores. And we have seen, as per the half-yearly review, that about 50% of that, if not more, has already been spent. But there are 2 other constituents who need to support the government in this capex spending or infrastructure investments. One is, of course, the state governments, because the last mile connectivity is under their purview or jurisdiction. So we do hope that the scheme for special assistance to states on capital expenditure continues. I think it will continue, but we do expect or we do hope that there is an increase in outlay because the states spend around 5-6 lakh crores every year on capex, and some support to them would be useful.
Arindam, that's a good point on capex because and Aabha also wants to come in, and Saurav has a question for Shogoto, who's been waiting by patiently, and Shogoto also has to leave. On the capex point, between FY 16-17 to now, it's actually trebled, but carry that forward.
Yes, I just wanted to check, ask Shogoto, how much of leeway will the finance minister actually have, given the fact that already, there is you have to keep the fisc in mind very clearly. There are global headwinds. There is an inflationary headwind globally building up. What Shogoto, do you think is the kind of leeway which the finance minister will have as far as pushing capex is concerned? And more importantly, do you think, given the kind of lag which the state governments have in terms of implementation of the capex, which they share with the center, do you think it's really going to work the way the government wants it to be, and the private sector really coming in a year where there are headwinds?
Excellent. You summarized it so beautifully. I mean, so one, obviously, I mean, there's not too much of headroom for increasing capex beyond the 7.5 lakhs direct spending, plus the 1 lakh additional special assistance to states for the Gati Shakti type projects. Not too much. Maybe from 7.5 to 8.5. Remember this time, unlike a nominal GDP growth of around 15%, 15.4% for FY23, nominal GDP growth will only be around 10.5 to 11%, and that will constrain tax buoyancies. On top of that, the additional IGST, etc., that was being collected via high commodities prices will probably be much lower. So from the revenue side, unless you get a lot more from the asset monetization pipeline or maybe some disinvestment, etc., the revenue headroom is likely to be more limited. But the need for capex is very, very special. And for that 1 lakh, I think the government plans to spend at least 80,000 odd crores on the special assistance to states. States need to up their project development capabilities, because it's one thing to have a capex outlay, but the pipeline of projects need to be strengthened so that a lot of feasible, viable projects, capital investment projects come up. And as we heard, states are a very important component of this. So I think strengthening the project pipeline rather than increasing per se the total capital outlay is very, very critical. On top of which, I think private sector capex, we are just seeing an increase in private sector capex, and it's broadening across the spectrum. It used to be very concentrated in a few segments. Now it's beginning to become more widespread. So that process needs to be accelerated, and for that, capping interest rates at a certain level. Remember that the 10-year government benchmark, government security is the benchmark for all interest rates. So that will be very, very critical. So I think indirectly, rather than the direct spends, the indirect ecosystem for promoting capex becomes very, very important as part of this budget.
Very true.
Shogoto, please stay if you can with us, because I have a quick interjection to bring in here from Karishma. Karishma, you've been standing by. It's been a long day for you, early morning, and the budget Bible that you sort of put together for us had several interesting points, and I just want to take one particular point. In terms of the spending for road transport and highways, and hopefully Chetan Bhutani will also be able to talk about, and then defense, education, health, the 6 or 7 priority areas. What's your sense about which all areas this overall push for infrastructure and capex will come from North Block? Because in our previous conversations with Finance Ministry secretaries, certain hints were available with regard to their thinking. Karishma.
Well, Siddharth, what I have picked up from my sources, the focus is going to be on the 2 big R's, that is the roads and the railways. That is where the government is going to keep its capex
2 big R's.
focus and continue to do so. In fact, Two big R's, right, and not the red R, which the global economy is, of course, talking about, but the PM Gati Shakti has been on the agenda and on the focus. In fact, we have also been picking up that in this budget announcement, the government could actually plan and set a master plan for expressways that have to be formulated further, and focus could actually be given to 18 more such road projects in the upcoming fiscal year. In fact, there could be an increased budget that could be taken up by the Road and Highways Ministry. Of course, my colleague Chetan Bhutani will be able to give a detailed analysis on this, but I'm told by my sources that close to 1.5 lakh crore could be allotted to road and infrastructure projects and highways for the upcoming year. Besides this, of course, conventionally they're going to keep their focus on defense, on education, on health. In terms of aviation, not a lot is expected because the government had given a minor tax relief to the ECLGS scheme mid-year last year, but but what stays, of course, on priority is road and railways.
Karishma, just very quickly on a lighter note, we've seen this finance minister go from a very long budget to a fairly concentrated, concise budget. What can we expect this year, considering, there's fairly only so much to say?
Aabha, what we're missing actually is those beautiful poems and recitations that most finance ministers actually carried out in their speeches. There was not one in the last year, but we were expecting some kind of analogy drawn to some historical or mythological reference in this one. And we know that finance minister, when she's out there, she goes for it all completely and relates it to some bringing in some kind of traditional reference. So we're expecting that because last year's speech was well timed, so we hope that tradition will be carried forward.
All right, Karishma, you have lots more to do post the budget as well, so I'm going to let you go at this stage, and we'll chat later in the day. Dharmakirti Joshi, Chief Economist of CRISIL, also with us. Welcome. And the first question quickly to you, Dharmakirti. My colleague Karishma just said that the two R's that will be in focus will be roads and railways, and she also said that the finance ministry is pretty confident that the big red R, the global R of recession, is not going to be touching India. So out of the three R's, we seem to be well placed, Dharmakirti, as far as our budget and economy is concerned.
Well, I think the first two R's I would agree, because I think if you look at the last few budgets also, the infra spending is concentrated on roads, railways and urban infrastructure. About 76% of the spend goes there. So that will continue this year as well. I think I'm pretty hopeful. But about the third R, there is a lot of uncertainty. I mean, if I take you back to the last budget, I think all the assumptions that were made, I think completely went awry within just few weeks of the announcement. So the global environment is quite volatile and quite uncertain. So we really don't know how it's going to play out, how deep the slowdown will be. So I would say that one needs to be a little cautious on the global side. I think the domestic side, from the budget, I'm still okay. But I would hold my horses as far as the global environment is concerned.
Okay, Shogita, I want to just come back to you for a moment because you touched upon capex, and that's something that I'm keenly watching out for in this budget. Just also wondering in terms of financing, I mean, where does the onus lie? I mean, are the companies ready to spend but aren't spending yet, or are the banks as yet still waiting or being a little bit cautious in massive credit offtake because of the current scenario that we're seeing and the uncertainty? That's debatable, but still there's a little bit of uncertainty as we've kicked off the new year.
Yeah, you're completely right, Aabha. That financing is very, very key. So the government can't spend. I mean, the government can spend only a little bit to crowd in private sector investment. Banks are actually offering a lot of credit, but obviously not too much for the large infrastructure, long gestation infrastructure projects, because the banks deposits, liabilities are short term and they cannot afford to finance long duration projects. So that can't happen. So we're waiting to see what kind of additional support institutions like NABFID, the new bank, the development financial institutions that's meant for long duration projects, that's one. I think there is, so from the corporate side, one, because of the deleveraging and because of the cash flows that have come in, corporates, particularly the large corporates who do a lot of infrastructure projects, have built up fairly large internal accruals, which can fund some part of the projects, at least part of the equity. So for project financing, as you know, the debt equity ratio is very, very important. So the equity component is largely in place, or probably, is in the process of being put in place. That potentially can bring in long-term debt. And this is where the government needs to open out all resources to try to see what kind of funds, the overseas sovereign wealth funds, pension funds, etc., which are the long contractual savings institution, and encourage domestic provident funds, insurance companies to come in some part of the project. The key, of course, is risk management. As I mentioned before, that entire investment ecosystem needs to be developed very carefully so that the long contractual funding savings institutions, insurance provident funds, sovereign wealth funds, pension funds, etc., global investors are comfortable with the projects. The project risks are managed. And this actually, is an opportunity to develop the market for risk management products in India, coming in from a banking and a financial sector perspective. This is a wonderful opportunity to develop these markets. The regulators are working on the corporate bond markets, etc. I'm sorry, this was a long-winded explanation, but there are so many things which need to fall in place.
Absolutely, Shogata, and that's I think the challenge of a complex and diverse economy like India. Thank you very much for your time with us today. I want to go to Ketan. Ketan, revenues have been strong. This is not specifically a tax policy, but a tax numbers kind of question. And we've seen robust tax collections being one of the good positive surprises and exceeding budget estimates as well as historical tax collections. This is the third consecutive year where budget estimates of revenue will be exceeded. But the broader question is, have we sort of reached a capacity limitation, especially because the economic survey projects lower nominal growth? Is there scope for further revenue raising measures? Forget the giveaways that may happen at the margins, Ketan, Dalal.
So, Siddharth, I would look at it in a sort of step back kind of light. If you look at the revenues, whether it is income tax revenue or corporate tax revenue or GST, the top companies are constituting a very large chunk. So, for example, I was quite amazed to see that 0.1% of SSEs are paying 50% of GST. And the remaining 99.9 is the balance 50. Similar trend may not be exactly similar, but still highly skewed in favor of the top companies. Siddharth also stands true for corporate tax collections. And that brings us back to the point that Mr. Gopalan made for let's say, MSMEs. The other taxpayers, I'm not for a minute restricting to business taxpayers and not to individuals and salaried. If the ease of doing business is given a greater focus, and I know a lot has been done, but a lot needs to be done, I think the base will expand automatically as a consequence of that. You have to make it easier for people to do business. You have to make easier for people to comply with things. And that I think, and of course, I think infrastructure spending will also be obviously very, very important because infrastructure, logistics cost, all that. So I think there is a path towards growth, and I think the growth will broad base the revenue to my mind. I'm not an economist, Siddharth, so I can't say what next year is there, but I think the revenues will keep growing because on the ground one can see that growth.
Ketan, before I go to Mr. Gopalan on that, a quick interjection. No surprises, negative surprises, right? I think the Modi government Modinomics has clearly established one thing: no negative tax surprises.
Well, see, there are things which come as sort of retroactive kind of things, and once in a way, there have been in the last few budgets as well, not retrospective in that sense. But I think while it's one thing to say no negative surprises, the other issue to note, Siddharth, is the on-ground administration is an issue. But if you are talking from a policy standpoint, I would say unlikely. I mean, you are probably referring to wealth tax or you're referring to estate duty. At some point of time, it should come, but I think in the current highly volatile environment, I would doubt it.
So Saurabh Majumdar wants to come in, and then we'll go to Mr. Gopalan.
Siddharth, in fact, I have a question for you. In fact, the Prime Minister before the yesterday, in fact, he talked about how the world. This is not a budget which is not is just a budget for India. Now the world is watching after the IMF announcements in particular, and this is a budget which the world is watching very keenly. What do you think he means by that?
There are two things. One, Vishwa Guru Bharat, G20 chair this year, plus the political awareness that in a year when you are being projected not for this year but for the next year as well as the fastest growing economy, yes, it's a signal, don't do anything to derail that growth story. And Aabha, on that note, I know you wanted to go across to Arindam, but yes, Mr. Gopalan very quickly, and then Mr. Dharmakirti also. Mr. Gopalan, this question about no negative surprises and stable policy making to continue. The road ahead is bumpy. There are lots of, ditches where the car could get stuck. So, steady hand, don't do any experimentation. Is that the mantra, sir?
Steady hand is very important because stability of, everything, including tax regime, predictable regimes are extremely important for developing or improving the investor confidence. Stable policy regime, law and order, ease of doing business development, the emphasis on innovation, openness of economy, including trade regimes, creation of new infrastructure, and solve specific problems of various sectors. These are some of the things which would increase the investor confidence. And to that extent, it is necessary because if the private investment is to grow, which is going to be the engine of growth, sustainable growth for the economy, all these things have to be done. On revenues, 2-3 things I want to point out. It has been very good, for a variety of reasons. There have been a lot of increased use of data analytics, which has thrown up a number of cases where avoidance has taken place. Plugging revenue loss has taken place. Input tax credit was one area where there was problem that has been plugged to a great extent. And with the way the base expansion is happening through the various ways in which the government is doing, this is also going to improve the tax base. So I won't be surprised. 1.56 today is not a surprise at all. It has got to be even higher as we go along, as far as GST is concerned.
I have a question for Dharmakirti. We've not talked too much about disinvestment yet. Disinvestment has been not a great success story as far as the budgets are concerned. This year as well, we've fallen far short of the target. Where do you think, DK, the disinvestment story lies, and what do you think this budget will do? Because there is a clear sense that the budget wants to be much more realistic about disinvestment, given the fact that every year we are talking about the targets not being reached.
No, absolutely. I think my sense is that they will have a disinvestment target which is lower than what they budgeted last year. I think it's always good to budget lower and outperform. But nothing stops you from doing that. So I think, but if you give a higher target and don't achieve it, then it becomes an issue. So I think from a transparency and also communication perspective, I think having a reasonable target for divestment in a difficult pre-election years are always difficult. So I think in this year would make a lot of sense.
On the capex piece, and clearly attention will be on how to rejuvenate the cycle there, and how demand for credit also seems to be leaning primarily towards driving employment when it comes to the construction segment as well, while in agriculture it's fairly limited in terms of elasticity, and obviously some of these drivers will help to support growth with kickstarting construction and infrastructure, and we'll see also that resulting impact on consumption. what do you feel are the main parameters that the government may look at in order to boost? We've been talking about this a lot, through this conversation. And yes, there may have been some spending that they've already outlined, some incentives possibly through PLI. What more can we really see? Because we're still not back at the growth levels that we saw pre-pandemic. While we may be better off relative to the rest of the world, we're still not where we potentially could be as a thriving domestic economy.
Is that question for me?
Arindam, yes.
Yeah. No, I think, we discussed some time back, Saugata was very correct at pointing out that there is only so much which the government can spend, particularly on infrastructure.
Yeah.
And let us remember that infrastructure not only drives the construction sector directly, but it's also an instrument to reduce logistics costs and improve the competitiveness of the country. And there's a clear requirement to boost private investments there, as you pointed out, Aabha. Now, there are two measures which actually we are looking forward to in the budget, which can do this without the government committing too much funds on its own. One is, I think there's an immediate need to boost credit guarantee mechanisms for infrastructure projects. If we look at the situation today, the limits which we have for credit guarantees are minuscule, given the infrastructure investment which is happening annually. And we also talked about domestic pension funds. I think all of us know that there are some minimum credit rating thresholds which these funds have to go by. So having expanded credit guarantee facilities, possibly on a national single window basis, could be one solution. The second area, which again would not require too much spend by government, it's only the initial corpus which needs to be put together, is a combination of a securitization cum asset-backed securities platform. I think countries like Singapore have done this successfully. What this will enable is to free up bank and NBFC balance sheets, which are today the main investors in infrastructure, and open up a new segment of investors in the asset-backed securities, where the underlying assets are the securitized loans.
All right, Arindam, thanks for those thoughts. Let me head across to Chetan Bhutani, who's our associate editor who covers the infrastructure piece. Chetan, you've been, you got stuck somewhere near Parliament, and we can see the sun is out, and you are ready to tell our viewers in terms of what are the key expectations that you feel are going to come through. Karishma spoke about the 2 R's, roads and railways, being the focus. What would you add to that?
Well, Siddharth, the roads and railways, as my colleague Karishma pointed out, would be a very key important aspect. Remember, roads and railways have seen one of the highest allocations ever in the Modi government. This time around, the allocations for roads could be about 30%, and for railways could be about 25 to 30% range itself. So about 1.99 lakh crores roads was given last year. This time around, we can expect an increase of about 10,000 odd crore rupees, and railways also would be about 25 to 30%. In fact, the power sector would also see a significant outlay, because remember the government's smart meter scheme, in which the government really plans to have smart meters installed across all rural households, connecting to the Maganrega. That would also be seen as an important development. Fourthly, the battery storage system would also be possibly announced in the union budget, because the government is focusing on circular economy, and of course the renewable energy focus would be present in this union budget. We can expect a significant announcement for battery energy storage system, and of course going forward the green hydrogen as a circular economy will also be announced in the union budget.
Chetan, one quick follow up. Any possibility of any changes where car prices will go up?
Well, Siddharth, the car prices are definitely going up, but yes, a very important aspect that will also be announced, and auto companies have been seeking this from the union budget, is of course rate rationalization for electric vehicles. The electric vehicle manufacturers, alternate vehicle manufacturers have been seeking a lot of relief. The government, on the other hand, has repeatedly provided steps, be it the FAME scheme, be it reducing GST on ethanol, or GST on battery manufacturing in India. But yes, we can expect some relief for electric vehicles, alternate vehicles, because remember, the electric vehicle revolution has just started to kick off. A record number of EVs being sold in India, especially in two-wheelers, and of course, a four-wheeler vehicle car is also expecting to pick up. But yes, for the ecosystem.
Chetan, there was also talk or at least a demand that electric vehicles should get tax breaks to incentivize them, specific tax breaks. Is there any possibility of that happening?
Well, yes, Siddharth, that's a higher possibility, because remember, the government had introduced a FAME 1 and a FAME 2 scheme in which various tax breaks were given to the EV manufacturers, but really the industry had some issues with respect to qualifying for availing that FAME subsidies. But yes, the government could introduce, in fact, my sources have also told me that earlier on, we have reported consistently on Business Today TV that the EV manufacturers could probably see some relief, where some tax breaks or incentives in the form of rationalization of taxes could be given.
All right, Chetan, thank you very much for that. I'll let you go because I know you have to track several of the infrastructure ministers, including Mr. Nitin Gadkari, who's involved. Aabha, yeah.
Just want to touch on the market. It's not looking too bad. I mean, yes, we're around 60,000 and just below 18,000, but I mean, technically, budget morning to see a fairly strong start, I think that's encouraging.
In fact, as we thank our guests for being here with us and we wind down this conversation because we will very shortly soon be live after a break with the finance minister's speech. Saurabh, just a quick recap, the point that Aabha made, and Udayan was here with us. We saw pre-open above 60,000. It went down and I saw 50, 999, kind of figures, and it's now at 6133, up almost 580 points. I think that's the highest so far today, Aabha. What is the market reading? Because the markets always know, and they know before everyone else.
They know, and this can't be a market worried about capital gains tax. Right. If you're up 1% before the speech.
Or Adani.
But if we can take a look at the Adani pack, I noticed some of the Adani scripts are not doing that well. Continuing overhang, really, Aabha, what is it?
For sure. I think it's going to be a while before they bounce back. Interestingly, yesterday when we were speaking to all the experts, they said even despite
Adani Power, Total Gas hit a lower circuit, and right there on the screen, Enterprise is down, Green down, let's see what else, Ports down, Power down near 5%. The entire pack, really.
Experts are saying that valuations are still not good enough, but more than that, I think if they're seeing this kind of action and lower circuit kind of action, that means the market's still extremely worried.
But on a broader sense, Siddharth, coming to the question you asked in terms of what the market mood is like, and it's quite strong for a pre-budget kind of a session. I would think that this whole point of no negative surprises. I think if that happens, then the market will be, because remember it's a pre-election year, the pre-election budget, so therefore there's every chance that whether the government will go populist or not. But we are very clear, I think most experts have always said that they do not expect this budget to be populist, because there are so many factors for the government to consider. They cannot loosen purse strings beyond a point for the nominal GDP and all of that playing out. So I think the fact that they do feel that this budget will not hold any negative surprises. Now, whether there is a capital gains restructuring, that's anybody's guess.
I'll tell you one thing, and this was at our Market Today Summit, Aabha, and we had some of the biggest voices in the markets today. And offline, one of the things that I remember, and this was said in Hindi, Modi ji kya karne wale hain, and I was telling this person that our budget theme is Modinomics. He said, Modi ji kya karne wale hain, keval unko pata hai. पर हमें ये पता है कि वो क्या नहीं करेंगे. Some of these lessons have been learnt, and remember, Modi won the first term, had big ticket radical changes, overhaul the whole world, GST, Notebandi, so many other things. Modi too, and the final budget, one consistent thing is post-budget shocks emerging from external, so keep your guard,
keep your house in order.
Keep your house in order. I think that's the best. Yes, Aabha.
It's always been an agenda-setting budget. It's never gone into the nitty-gritties. It's always been this is what we're about. This is what the government is trying to convey in terms of its policy, agenda,
And I
mission.
also, Aabha, I want to come back to the statement the Prime Minister made about this is a budget the world is watching. So, you know, you want to set some of the templates for the future. I do think that this will also set out the Amrit Kal agenda, take it forward.
The 25-year.
The 25-year agenda. I think we cannot miss that.
Yes.
So I think this is a budget when the Prime Minister says that this is a budget the world is watching, it means something.
It means
Absolutely. And that long-term 25-year vision also sending out a very important political signal that it may be the last full-term budget of Modi 2.0, but that will prepare for Modi 3.0. We'll be back with the Finance Minister's speech. Viewers, stay tuned in to Business Today Television as we get you some of the finest voices and analysis on Budget 23-24. We'll be back with more. Till then, goodbye.
The only budget coverage worth your time. Blazing fast, actionable budget analysis. Budget intelligence that will dominate.